Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. Okay, so there is a lot going on here in a relatively short amount of time, but it seems to be resolving itself. So, two patterns have tried to catch the mood of this market, and they've also frustrated the hell out of me. But I think now that no longer will play a role. The first was the previously mentioned mid-February to early May pink descending triangle pattern type, which I finished with back in early May. The second pattern utilized the pink lower trend line, but instead was a smaller pattern and dates from mid-March for bright red upper trend line. We've had a break on the downside at the end of April, but with changeover, prices found themselves initially back within the descending triangle, and then 4 weeks ago back out again, but this time breaking higher out of it. Key support on the downside had been the 38.2% absolute Fibonacci line at 521. The top side was dominated in recent days by the combination of the flatlining gold long moving average, currently 567 3/4, and a new flat dark blue trend line, currently at 570 1/4, which I will deal with shortly. I said last week, and I quote, "Please just bear in mind that beyond these we have some clear air up until the congestion at 588 and the March 2021 low at 592, end of quote. As you can see, yesterday's action proved that to be the case. Now, I said earlier that the two descending triangles will no longer play a role, as a new pattern has emerged and seems to have taken over the running of this market. It is not a great looking pattern, but it's still nevertheless there and seems to be dominating the action. It is the mid-March to late June reverse head and shoulders pattern, with that previously mentioned flatlining dark blue neckline, currently 570 1/4. Now, there is a lot going on in this pattern, but I will draw your attention to one feature, and that is the mid-May to early June double top pattern. Well, it failed, and now it should be considered not only as part of the second shoulder, but also as a possible halfway hesitation pattern. Now, I spoke about this possible pattern last week, and there is some elements there that I think you should also still consider, and I quote, is look at the whole mid-March to date action as a possible reverse head and shoulders pattern. Typically, this is seen as a bullish reversal, but head and shoulders continuation patterns also exist. So, delay an opinion on which one until I have some further data. The neckline for this, well, I'd use the critical gold long moving average right now until we see further developments, end of quote. As you can see, I finessed the gold neckline into a separate solid neckline, and it's dark blue one, as you can see, and I have enough of a move higher, admittedly through some empty space, to lay out some potential targets topside. Thus, a primary target X would be in the 616 area, whilst a secondary, harder to reach target X1 would be up in the 635 area. I'll now watch and see if the pattern performs as a reverse head and shoulders pattern or not. Chicago corn. 5 weeks ago, I drew a mid-February to mid-April bearish Andrews picture, which, whilst not being exact, showed for quite a while the bearish angle of attack. However, the upper time, currently at 402, had been breached on a number of occasions, and 2 weeks ago was finally broken. Now, I've still kept the broken pitchfork on my daily chart, and that is for a reason which I will explain. I originally chose this steeper bearish Andrews pitchfork over the shallower bearish shift pitchfork for the same move, as I thought it gave a more suitable representation of the way the market was moving lower, which it did. However, and it is an important however, and I quote from 3 weeks ago when I said, however, that being said, the time's next crossover this coming Monday the 19th of May. So watch out for one or more of the following then: a change in trend, a reinforcement of a trend, volatility. Coincidentally, after changeover this week, prices are now testing the 50% absolute Fibonacci line at 425, so it's worth being cautious right now, end of quote. The caution back then was well rewarded and deserved, as on Monday the 19th we had a combined key reversal up, if only just, plus a bullish engulfing pattern and a bullish opening white Mariposa, leading to prices rising up in the early part of that week, 3 weeks ago, filling in the changeover gap and thus fully justifying the earlier time crossover warning I'd given. 2 weeks ago, with the break above the upper time, I drew the shallower bearish shift pitchfork on the daily chart for the same move as the bearish Andrews one, as the market transitioned from the steeper bearish Andrews to the shallower shift pitchfork. Thus, right now we are in between the overhead middle time, currently at 436, and the lower time below, currently at 400. The next obstacle topside remains the November 2020 high at 439, while looking below the immediate 50% absolute Fibonacci line at 425, we have the December 2020 low at 414, which ties in with the low of late November last year. Support is then fairly evenly spaced out at 409 and 403 until the November 2020 low at 397, and that is just about as far as I'd like to go right now before I once more review the market action, obviously should we manage to get down that far. There is a significant event I would now like to discuss. Now this ties in with the earlier crossover of times back on the 19th of May. You see, the next crossover, indeed the last and possibly the least powerful crossover, will happen on the 24th of June, so next Tuesday. I've highlighted this with a bright red circle just above this picture of me on the screen. Be wary then, just in case we see a possible change in trend or a reinforcement of an existing trend, and of course volatility, or even all three of these all at the same time. So, caution. Kansas City wheat. Since mid-February, two major patterns have developed here, one of which is still live and a third that is no longer operational, but from which we have some echoes that resonate even today. The first pattern is from a mid-February, late April sideways triangle, made up from the bright pink uptrend and the bright red downtrend. It's not a great looking pattern by any means, but it nevertheless still exists. And 8 weeks ago, prices pushed down below the pink lower trend line, whilst at the same time following in lower from a mid-March to early May bearish halfway hesitation pattern. The second pattern is a dark blue February to March bearish shift pitchfork. This pattern is still live, just about, as prices are right now piercing and testing the upper time, currently at 583. In the most recent action, I have to say, yesterday was key. A key trendline extension, currently at 565, a key session as prices push down through the combination of the bright green lower trendline extension, which is currently at 565.5, of the November 23 to April 24 descending triangle, and the short purple upper trend line, currently at 566.75, of the interesting mid-May to date bullish halfway hesitation. This pattern is interesting as it started as a possible double pattern, a double top pattern, a quite good looking pattern, but then became a small expanding wedge pattern as part of a larger bullish halfway hesitation. After this, the market sliced higher without a care, it seems, through both the flatlining mauve medium moving average, currently at 570, and the flatlining gold long moving average, currently at 573.75, plus the July 2021 low, to peak yesterday just over the dark blue upper time, but today to start pulling down back to it and the July 2021 low. There's one other thing to consider, and I've not highlighted it on my daily chart, but it's becoming increasingly significant. 7 weeks ago, prices broke down through the now lower time, currently at 551.25, of the significant, if very shallow, late August to December 2024 bullish shift pitchfork, the one I was considering retiring. I've kept it on as these past few weeks prices have moved back over the broken lower time once more. Okay, so going back to the first pattern again of the sideways triangle, I said 7 weeks ago, and I quote, "All this action has nevertheless still left us with some targets below for the sideways triangle pattern type, with a primary target X in the 522 zone, not too far away, and a secondary, harder to reach target X1 down in the 471 zone. I'm not sure about these two, but for now they will do. End of quote. The primary target X did very nicely, being achieved soon after my video back then. But 2 weeks ago I spoke about retiring the harder secondary target X1 as it had a figurative question mark placed over it. Then last week I changed my mind, prompted by a number of factors at the time that in the end proved to be unreliable. So this week I'm back to retiring the downside target, and not just talking about it, retiring it, but actually retiring it. This has left us with a question prompted by yesterday and today's actions. Is the dark blue upper tine strong enough to cap the market? Or is the market likely to try higher, say up to the unhighlighted middle tine overhead for the very shallow late August to early December 24 bullish shift pitchfork? Can't get 660. I am not certain as yet, but the topside potential for the purple expanding wedge pattern has already been reached, and viewing it at a bullish half hesitation would only see a move to a little higher in the 590 area, which we've already reached. So to push up through to the push up through the April high at 589.5. The push up will be a challenge to push up further towards the middle tine, but first the market has to deal and stabilize over the dark blue upper tine, and it's not doing that just yet, it's just playing with it. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.